I'm going to share with you how to trade the boom and crash indices successfully and how you'll be able to make profit with some good analysis. Okay, now let's start with boom 500 index market. So we're going to the chart right here. So we're on boom 500 index market. So the first thing we want to pay attention to is the 1 hour time frame. So we'll go over to the 1 hour time frame to confirm a good entry position. Now guys, this is a live trading as you are seeing right here. Okay, it's a live session. So we'll go to the 1 hour time frame. At this point on the 1 hour time frame right here, the market is at the overbought. If we zoom out a little bit, you can see at this point, right, the market is at the overbought and the market is selling, giving us a downward trend. All right, that's the trend the market is following. If we put on the moving average right here, you can see that the moving average is about to go downwards. You can see it's going upwards right here, then it will curve following this pattern going downwards, just as you can see at that point. Right now, we just confirm a good entry for a sell because the market is at the overbought. All right, the market will be buying for a long period of time. The market will be buying for a long period of time. From here, you see the market will be buying. So the next step is for the market to sell, going downwards, just like that. All right. So what we should do right here is to go back to the 1 minute time frame. All right. You know that boom and crash indices is mostly traded on the 1 minute time frame. Right, so on the 1 minute time frame right here, and this we're seeing that the market have bought from here to this point and it's selling. So if you're in the market right here, you don't want to place a buy. So if you're in the market right here, you do not want to place a sell because the spike would come into the market, just as you see right here. Okay, this is the 1 minute time frame. So we're going to put on the RSI, which is the relative strength index. Period 14, apply to close, levels 90 and level of 10, 4 pixels from here. The color black with the straight line. Then the style right here, you put it on 1 pixel with the color white. Then that should be it. Okay, you can see you have 2 levels, 90 and level of 10. So we're going to use the MACD indicator. Put it on indicator window 1, fast EMA 14, slow EMA 24, the MACD SMA 10. You apply to close, then the style and the main on off 4 pixels with the color of black. Then that's it for those 2 indicators. All right, like I said, you don't want to place a sell at this point because the market will buy and spike will come in because we're on the boom. We're on the boom 500 index, so we can see that the spike just came into the market and we're still seeing another spike again. If we zoom out right here, take a look at this, you can see the space between here and this point. Right, you can see the space between here and this point. So there's a spacing between this, a lot of space, meaning that the possibility of the market to spike is extremely high, right? Because of the amount of space between here, this line that I drew, and the overbought, right? You can see. So there's the possibility is really high. So if you are trading on this type of market, these are things you need to check out for and watch out for so that you don't end up in a losing trade, right? So what we're going to do right now is to check the MACD indicator. If you are trading with the MACD indicator on the bull market, when the MACD here is going upwards, it's going to show you that, it's going to tell you that the market is going to spike. All right, when you start creating an upward trend, if you take a look at this point, this red line here, it starts curving upwards, right? Just as you are seeing here, it's curving downwards. When you see it at the bottom curving upwards just like this, know that it's time for the market to spike and it's time for it to start creating an upward trend, just like here, right? From here now, you saw it start creating an upward trend going upwards, and you can see a lot of spikes in the market. So this is still an upward trend, so you don't want to place a sell at this point, and you do not want to place a buy as well, because if you place a buy in this position, the time that the spike would come may take long a little bit, and even though the spike comes, it might be small, all right, and you might end up losing a trade. So this is what you need. This strategy is just for you to know when to place a sell on boom 500 index, all right, using this simple strategy. The MACD and the RSI, also the moving average, and you see that the moving average now, if we zoom in a little bit, you can see here it start curving here, it start curving at this point, going downward at this point. All right, so the best point for you to take a sell is towards the downward trend. When you see that it start creating a downward trend here, that's when you place your sell. Take 5 candlesticks from the market. Okay, and when you're taking those sells, make sure that the market is at this point right here, probably from here, from this point, between this region here. Let it be below here if you're taking a sell, so that anything above this point here, the market could spike, just as you see here, spike upwards. The market could spike, so you can mark here as 69 here, 6974, this point right here. So anything above that length, the market would spike. And remember that when it's above here, the MACD is going to be on the upward trend. When it's below here, it's going to be on the downward trend. All right, it's going to be on the downward trend, as you can see. Okay, it's going to be on a downward trend. So remember 69. Now if you are trading, you want to put it on the third zoom level. Okay, 1 2 3 here, the third zoom level, so that you can see the market clearly right here. When it starts creating a downward trend, that's when you place your sell. You enter the market at this point here. When the red line is above this black line, you see that you will notice that it starts creating a downward trend, so that's when you enter the market. And please note that even though you place a sell during this point, the market can still spike. Okay, it can still spike, but the chances are not that high. Okay, that's why this is mostly the safe zone. You saw at this point here, it started going upward, start creating an upward trend from this point. When the red line cross below here, see, this is the point, it started going upward. Here it started going upward. Let me mark it so that you can see from here. All right, it started going upward. Then you see there was a lot of spikes started coming in for the market. So you want to avoid this position on boom, only on boom. This applies only on the boom market. All right, so what we're going to do right now is to go to the crash 500 index market, so that we can see how we can also use this same strategy and analysis to trade the market successfully. All right, trade the market successfully. It's not yet time. It's not yet time. It has not start creating a downward trend. Okay, it's not start creating a downward trend yet. So we'll go over to the crash 500 index market. We're using the same parameters, but the pattern is different. So on the crash 500 index market, you see here that the market has bought, right? So you don't want to enter, you do not want to place a sell, and you do not want to place a buy. All right, you could place a sell to catch the spike, because we're seeing that the spike would soon come into the market, because the market have bought for a very long time. So the spike would soon come But the reason I said that you cannot place a buy, the reason I said that you cannot place a sell, you see that the market have bought for a long period of time, so the spike will soon come and the market could sell, but it's not good for you to place a sell at this point right now, because the sell that could come into the market might be small, right? So we need to do a confirm entry. Go to the 1 hour time frame. All right, the 1 hour time frame, you can see here the market has bought from here down to this point for a long period of time, right? And we're expecting the market to sell. Now the market is still going upwards. It starts creating an upward trend, and when it starts creating an upward trend, the market would sell. All right, it would sell here. When it starts creating an upward trend, to start selling. So like I said here, that is not a good time for you to place a sell, because the sell that will come into the market might be small, just as we are seeing right here, a very small sell. And imagine that you have placed a sell from this point. Imagine you would have lost 5 candle ticks for just this small spike entry, so it's not a good opportunity. Although we're seeing a sell, this market is going to sell, but it's not yet time. And on the 1 hour time frame right here, the market have bought for a long period of time and it will soon start selling, but this is not the right time. So we have a hope that the market would soon sell, but we're still seeing a little bit of buy, because the market from here, it sold for a long period of time, and right here it just started buying. So because of the 1 minute time frame, we know that the 1 minute time frame moves quickly than the 1 hour time frame, but we confirm our entry on the 1 hour time frame. So this is the 1 hour time frame right now. What I'm seeing here is that the market will buy, but it will still sell again. All right, and during the downtrend of the MACD, the market would spike very much during this downtrend of the MACD on the 1 minute time frame, guys. And we will see right here that this is the oversold tool. The market is going to buy, that's the signal. But since we're scalping the market, we're waiting for this market to sell first, a very long sell. From here, we need to wait until this market sell from here to this point before we're going to place a buy. Okay, before we're going to place a buy, take a look. It's sold from here down to this point. It bought, it sold again. So now this market have bought, so the market need to sell again, just as it did here. Now you need to sell up to this point before you can enter the market for a buy and scalp the market before, because if you enter the market right now with this type of market chart, if you enter the market right now the way the market is, you might end up losing a trade. Okay, like I said, we should wait for this market to sell before we place a buy. Remember I told you guys that we are expecting a sell from this market, and the market just sold right now, so it's a good opportunity now if you want to buy the market, just as we are seeing right here. Now you can see how perfect this analysis is. All right, so if you found value in this video, do it to like and subscribe to the channel, the Daily Forex, for more some trading tips and strategies. I'll see you guys on the next video.